Let's get to your Q4 pick. What's your best idea for Q4?
So I like, Frank, biotech, the IBB. It's interesting. This sector, or subsector, I should say, has been on the map for some while. It's been on the sidelines for all the price action that we've seen, the concentrated performance in AI and AI adjacent. But the subsector is up 15% year to date. It's up 36% since the April lows, and it's up about 9% since late September. So we like this sector into the back end of this year and actually into early next year. Rates are heading lower. We know that. I think that's going to spur some deal flow in this arena. I also would say, as it relates to big pharma, they are looking to rebuild their pipeline. So I think that's also going to be a catalyst for deal flow for some of these smaller biotech companies, which I think could be a nice return for many investors going forward.
All right, so you want to play it broadly with the ETF, the IBB. I do want to ask you one question. So we've seen a lot of administration intervention in the healthcare space this year. However, biotech seems to be a bit of a different story. The administration seems to be very supportive of getting drugs to market faster. Why not play this as an individual play with a couple companies that could benefit from that, as opposed to the broader sector that generally has a lot of unprofitable companies?
That's true. That's true, Frank. And I think that a lot of these names, as it relates to, so Gilead, Amgen, and Vertex are kind of the main players in the IBB. But I just think that there are going to be some smaller players in that space as well that are going to benefit from the M&A activity. That's why we want to play it more broadly, kind of given the interest rate backdrop and kind of the macro backdrop. So we didn't want to key in on any individual names. We want to play the sector at large because I think there will be a lot of activity across the board here.
All right, you're mentioning rate cuts, and of course that's expected to boost biotech. The idea of rate cuts, but wouldn't other sectors just be a bit more attractive with the idea of rate cuts? We heard an earlier guest say they like industrials, materials, and of course financials. Financials direct beneficiary of rate cuts if it reduces the yield curve. So why play rate cuts through biotech when there seems to be a number of other plays?
Well, I think all those plays could work as well. And I think, again, biotech has been on the mat. What I would say as well as it relates to biotech, R&D expenses, with the cost of capital coming lower, I think that could be very accretive to margins and margin expansion in this space. So that's why we tend to lean heavier in this direction. I think healthcare at large is a nice play. It hasn't done well so far this year. It's kind of had a little bit of bump over the last couple of weeks. But I think some of these more cyclical plays going into next year and kind of the earnings story looking better for the 493 and the other sectors of the economy is the reason why we like this subsector of healthcare.